On the Money Watch, investor Mark Cuban is well known for his role on Shark Tank and for being an owner of the Dallas Mavericks and just for being an all-around very rich guy. Now, Cuban is speaking out about student loans. He predicts at some point there will be a cap on student loan guarantees, college costs will decline, and some schools will actually have to go out of business. He says the student loan bubble will burst, much like the housing market did. Certified Financial Planner Joe Bert has been talking to us about this for several years now. Joe,
it's going on. It's only getting worse.
I think every time we talk about anything, you bring this up because you're so concerned about it.
Right.
How likely is it that this is going to happen?
Well, what he's talking about, first of all, I think the headline grabber here is colleges are going to go out of business. Colleges will not go out of business, but you will see fewer of them. I think your for-profit universities will be impacted and your smaller colleges.
So we're not talking big state universities.
No. But they're going to have to change perhaps the way they do business. But it's not going to happen overnight. Right now, Tom, we have an arms race going on in the higher education business. They want to build bigger swimming pools, bigger field houses, bigger stadiums, more benefits, all kinds of stuff because the kids can get the loans. It's like when the housing bubble happened. You can get the mortgage, people build houses, bigger houses than they can afford.
Spend.
Exactly. So if they can get the money, the colleges are going to spend it.
So what happens if there is, I know you don't think that there's going to be a bubble burst like the real estate, but if it collapses, what happens for you and me? What should the average person be thinking about? Why should we care?
Well, right now and going forward, we have a problem in the economy. It's because kids are graduating with debt. Kids that have debt can't form households. Can't form households, you're not buying houses. You're putting off buying a car. You're not taking vacations. You've got debt hanging over your head. So there's a huge impact throughout the economy. And that does affect you and me, because these are the kids that we want to pay into Social Security for you and me.
You know, when the recession happened, it was kind of the perfect storm. It wasn't just the real estate. It was other things. Does this have the potential to have the kind of impact that could put us back into a slow economy and possibly a recession?
Well, no, I think that's part of the reason why the economy is growing as slowly as it is. But you're not going to see the horror stories like we saw in the real estate market, people being thrown out of their houses and all these horror stories. What you're going to see is more kids living in their parents' basement for a longer period of time. And we're slowing down the formation of households. Formation of households is the key that drives this economy. And until we get that going, get that corrected, it's going to be a very slow economy.
So even if you don't have kids in college, kids going to college, you need to pay attention to this.
Exactly, because the key for financial security for you and me is a strong economy. And if we don't have a strong economy, we all have troubles.
All right, Joe. Thanks.
All right, Tom.